Hello and welcome to today's Gemfields Interim Results Analyst presentation. Throughout this session, all telephone participants will be in listen-only mode, and afterwards there will be a question and answer session. Also, just to remind you, this session is being recorded. I will now hand you over to Ian Hairbottle, the CEO. Please begin.
Good morning. I just want to start by thanking everyone that's in attendance at the meeting. I know you're all busy and there's a few other announcements going out today, so I do appreciate your attendance and being here. And obviously all of those who are dialing in and on the telecast as well, welcome to all of you. Basically, just from a format point of view, Janet and I are going to do a quick presentation. I think everybody dialing in and here knows the company very well. So rather than spending too much time on who the company is and what our strategy, we'll focus more on operational performance. And then after the presentation, we will go to Q&A, starting first of all with questions from the floor. And after questions from the floor, we'll go to questions from those dialing in. So without further ado, if I can turn you to the slide 2 is Gemfields strategy, mine and market. As I said previously, I'm not going to spend too much time on that. I think you all know what our vision is, really to focus on increasing supply of coloured stones and increasing demand. On that basis, if we go to slide number 3, I think we'll spend a little bit of time here because I think this is fairly pertinent to our results that we will be seeing put out today. And that's specifically the short and the longer term kind of market sentiment and market forces. From a short-term point of view, while undoubtedly we continue to be very positive, we see a lot of very positive signs within the sector in terms of demand for coloured stones in general. There have been a few factors that have had some level of impact on the company's performance, specifically when you compare the current 6 months numbers to the previous 6 months numbers. From that point of view, I think it would also be worth just quickly pointing out that when you compare the two numbers, one has to realize that the previous first half, so the first half of financial year 2016 was a very positive year. So you're comparing slightly less so to a year that was very strong. But with that in mind as well, there were some other factors that impacted on us. First of all was the one-off impact of the Indian demonetization. From that point of view, you would have seen that President Modi, or Prime Minister Modi, in fact, from India, had been communicating various strategies for a while about how he wants to formalize and improve various business forces within the economy. And while I think most people in our industry were aware that these things were coming, it came and it was impacted slightly quicker than expected, and it did have an impact in the short term. On top of that, we did see an extended election campaign in the US, and while campaigns in the US are not unusual, the actual split between the two parties was perhaps the divide was bigger than normal, and I think anyone who follows the sector would have seen slightly depressed retail numbers until after the election. I'm very pleased to say, and this is very clearly reported in a number of fronts, is that retail sector in January was probably the strongest ever for the US, and sentiment continues to be very strong. And of course, on top of that, we've also seen, and this has had some level of impact on us, while Gemfields is a coloured stone mining company focusing on emeralds and rubies specifically, there was some level of oversupply in the diamond sector, various reasons. Also to some extent because of the demonetization. We've certainly seen some of our customers looking or telling us they're oversupplied in the quarter carried down. This has also further impacted on some of their free cash flow. And of course, the fact that within the diamond sector, most of the sales or the auctions or the sites are funded by big banks. Within the coloured stone sector, that's not the case, so our customers have to bring their own free cash flow. So when you have these impacts, it'll naturally kick straight down to us. And then the final one is probably the reality that because Gemfields has done such a good job of improving demand, understanding general consumer awareness for coloured stones, there are more people beginning to enter the sector. So we do see in rubies, others are coming in emeralds, etc. as well. Most of these, in my opinion at the moment, tend to have more of a short-term view. with some of the other producers looking, rather than to build a sector, as Gemfields has always said is committed to do, to some extent possibly just dumping some supply. So with all of that on mind, Gemfields then believe that we have a long-term view, the fundamentals are as good or better, and we certainly have, want to manage the business with that in mind. So that just talks about short-term. On the longer term, global demand for emeralds, rubies, and sapphires climbed around about 213% from 2009. We certainly see that continuing. I was in almost all of the major consumer markets, so that was India, China, the US, and in fact even Russia within the last few months. And one thing is very clear is, as I said earlier, young consumer demand and awareness and appreciation for colored stones has never been as strong. And certainly that is flowing on to more and more of the larger luxury brands, either wanting to use more color within their portfolios and or, very encouraging, wanting to partner with Gemfields in terms of marketing and promotion. That goes through to the various, as I say, the launch of color in some of the top brands, and a very encouraging increase in demand from consumers. So I think long-term the fundamentals are as good as they've always been, if not better, but naturally with some short-term impacts in demand. With that, Janet, I'll pass over to you and we'll go to slide 5.
Thanks, Ian. So with regards to the financial results for the 6 months ended 31st December 2016, these have been impacted by the rescheduling of the higher quality emerald auction following the implementation of the new demonetization policy in India in November 2016. The deferral of the auction from December 2016 to February 2017 was to allow our emerald customers who predominantly hail from India as well as the market to adjust and adopt to the new demonetization policy. Our revenues and our profitability therefore reflect one less auction during the current period. Despite the revenues decreasing to $51 million, we believe that the long-term impact and the market fundamentals and the demand for colored gemstones remain very healthy. And the demand for our products is further evidenced by the results of our most recent auction last week, where we generated $22 million of revenue, and of which 95% in terms of value of all the products offered have been sold. We can see in here as well that we continue to reduce and improve our costs. This is inclusive of our continued commitment to building the industry by marketing, advertising, exploration, and new projects. Notwithstanding a negative EBITDA during the period, we are confident that we would achieve a positive EBITDA for the full financial year, albeit at lower margins than what we initially anticipated for. In relation to foreign currency, the Zambian kwacha has improved by about 5% during the current period, while local Mozambican metica as well as British pounds have devalued against the US dollar. This resulted to us recognizing approximately $2 million of net FX gain in the income statement. In relation to corporate income tax, the tax rates applicable during the period were at 32% for Mozambique and 30% for Zambia, while the mineral royalty and production tax were at 6% for Kajam and 10% for Montepuez. It's pleasing to see that at the November 2016 budget announcement, the government of the Republic of Zambia reiterated their supporting a more stable tax regime in the country, and therefore they didn't introduce any significant changes in the existing tax regime. The cash in hand at the end of December 2016 was at $12 million, impacted by the timing of the receipts of the auction proceeds from the December 2016 ruby auction. The outstanding debt at the end of the period was $58 million, giving us a net debt position of $46 million. During the current period, we held 2 auctions, one of commercial quality rough emerald and beryl in September, and one mixed quality auction for rubies in December 2016. The commercial quality rough emerald and beryl auction generated $10.7 million of revenues, an average price per carat of $3.28, while the mixed quality rough rubies and corundum generated $30.5 million with an average price of $27.88. As mentioned previously, we held the deferred higher quality rough emerald auction last week, where we generated $22 million of revenues and a very healthy average price per carat of $63.61. For the rest of this financial year, we plan to hold 2 more auctions, one of commercial quality rough emerald and beryl, and one mixed quality rough rubies and corundum. This is therefore one less auction than what we've initially planned for this financial year as a consequence of the short-term impact of the demonetization policy in India. However, we expect that the market will go back to its normalcy come next financial year, and therefore we plan to hold, as per normal, 4 auctions for emeralds and 2 auctions for rubies in the next financial year. Our costs improved by more than 10% in the current period as management continued to seek maintaining costs under tight control. The cost of sales reduced from $48 to $42 million, and this primarily includes mining and production costs of $25 million, depreciation and amortization of $11 million, and change in inventory of $6 million. As a result of the reduction in the auction revenues as well as the improvement in the mineral royalty tax rates in Zambia from 9% to 6%, our mineral royalties improved from $6 million to $4 million. Labor costs continue to be a significant contributor to the cost, accounting for about 35% of the total mining and production costs, while fuel and repairs and maintenance remain also a significant contributor, accounting for about 1/3 of the total mining and production costs. Depreciation reduced by about $4 million because of the extended life of mine at Kagem and Montepuez, but at the same time resulted from the completion of the highwall pushback in September 2015 in the Chama pit operation. The cost of inventory stands at $107 million, and this includes $48 million of rough emerald and beryl, $41 million of Fabergé inventory, $10 million of rough rubies and corundum, and $8 million of cut and polished gemstone inventory. Kagem's overall operating costs from an accounting perspective improved from $23.5 million to $20 million. And this is attributable to the continued operation efficiencies being achieved at the mine, as well as a reduction in the total rock handling during the current period from 6.8 million tons to 5.6 million tons, again, following the completion of the highwall pushback in September 2015. This also resulted, consequently, to an improvement in the strip ratio from 110 in the previous period to about 85 in the current period. Cash rock handling costs remained well below the $3 average that we have for Kagem. Production was at 10.7 million carats with a grade of 166 carats per ton. Variability in the grade and production at Kagem is not unusual, and this is mainly because of the varied nature of mineralization, as well as the inclusion of the bulk sampling operations for Tibolele and Librente, which are giving us continued encouraging results. We've scaled down in terms of the CapEx during the current period, and as a result of the changes in the auction plan scheduled, we plan to roll over a significant part of the initial planned CapEx to the next following year. Montepuez continued to give us impressive results, with increase in operations giving us an increased production from 2.1 million carats to 5.6 million carats, also with an improved grade of 29 carats per ton during the current period. The production now stands at 32.5 million carats since the inception of the project. It's also pleasing to see that during the current period, we've increased by more than 50% the amount of premium rubies we recovered as part of the mining and processing activities. Cash rock handling costs also improved from $4.75 to $4.59, again well below the average cash rock handling cost we have for Montepuez at around $6 per ton. We've invested to date about $100 million, and this includes OPEX, CAPEX, and acquisition costs at Montepuez. And we've generated a total of $225 million out of the 7 auctions that we've done today. Our capital expenditure plan is going ahead according to schedule. We've spent about $9 million of CAPEX, and this included the upgrade of the existing wash plant, which we commissioned in December 2016. This will then allow us to increase our throughput rate from the existing 70 tons per hour to 150 tons per hour, and therefore support the planned increase in production in the next 3 years. With that, let me hand you back to Ian, who would go through the operations and new projects.
Thanks. If we can then just move to slide number 11. And slide number 11, we'll start with Cargem. With Cargem, we'll first start with some of the things that we are very pleased, and I think these are critically important. Our safety performance, once again for the period, there was no reportable injuries. Another outstanding job, and I think everyone in the mining sector knows that a company such as ours that has been able to achieve this for such a long period of time requires massive kind of commendation for that. So well done, guys at the mine. We also received the best award for the best environmental company achievement in Zambia. Also recognition for incredible social upliftment projects. I think those are important. They're generally something that I leave to the end of the presentation because I've always thought they're a given and it's what any good business should do. Increasingly, I've been told that's not the case, so I thought it's worth highlighting that for what it's worth. From an operation point of view, the team did exceptionally well. You will see that the actual costs have been reduced, while the amount of energy and effort and rock moved was still very considerable. Well, certainly an impact. Those of you who saw our results when we announced the resource statement, that was almost 2 years ago, that was 2015, the results of the resource statement for Cargem and Montepuez. There's a lot of potential for expansion of those projects. Obviously, financing of those was something that we looked at various options. It took longer than expected to really get the access to the cash, and that has impacted to some extent. So there is a slight delay in terms of production. But with a team, with another thing, and I'll say this ourselves, is this deposit, it's a fluid nature. We are still building the science, we are building the understanding, and every time we think we've just got it perfect, we realize that it still has some way to go. So even maybe with some of the numbers, we were over anticipating them, but the fundamentals for ramping up to 40 million carats a year is there, in fact, better than ever. And I think the best way to really see that is if you turn over the page, and this is something we have shown on many occasions, but I find no matter how often we show it and explain it, people tend to forget. So this is a 12-month rolling average of the grade, and what you will see is Gemfields got involved around about 2008, and you can see an immediate ramp up in 12-month rolling. That was improved performance, really better understanding. But over that period of time, even though it's a 12-month rolling average, there are still troughs and dips, which tells you 12 months is probably a little bit short, with maybe probably a 36 months being more accurate. But this is something, as I said, I think all of you that have been following Gemfields would have heard me say the following. A few months of very good grade, very good production is guaranteed to be followed by a few months of lower production, and a few months of lower is guaranteed to be followed by a few months of higher. The catch is when we've had some great months, we all forget that part and we keep looking at much bigger, higher numbers, and when we've had a few bad months, we all get a bit panicked. The reality is that the fundamentals in this mine are exactly, if not better. So I was at the mine the week before last. The understanding of the mineralization, the understanding of the block modeling, the actual trace elements is better than ever, but one has to realize it will always be variable to some extent. But as we improve our knowledge and as we increase our scale and continue to keep our costs very tight, we are very sure they will continue to move. And you can see the bottom line troughs are moving up and up the scale, and that's continued to where it will be. So on that basis, when we say that right now we are still expecting 25 to 30 million carats for this year, that means the second 6 months will be a very good 6 months. We have a high level of confidence. When we say we are looking to ramp it up to 40 million carats in the longer term, we are very sure of that as well. But it does mean some of the things that, as Janet said, happened in this last 6 months is we're also having to open new areas on strike where there's more work in terms of unknown or extra waste removal in new areas, etc., etc. But I think that's a fundamental component, and it does mean that Cargem, which is the foundation of our business, is still an excellent mine and will continue to be highly profitable and a key part of the business. If we then move on, Janet, to slide 13, Montepuez mine, what can I say? Montepuez is the newest baby in the company, and yet it's exceptional. There's very little you can say about Montepuez other than wow. A number of investors visited the mine in December, and we're hoping to have an analyst site visit to both projects in the near future. And Montepuez is just exceptional. We currently have under Montepuez Ruby Mining 360 square kilometers of license. We then also have, on top of that, we have the Megaruma, which is another 300 square kilometers, and we've just recently added Eastern Mining of another 100-odd square kilometers. The reason we're investing in expanding our Ruby project is because this is an exceptional asset, an exceptional deposit. You would have seen in the first 6 months that costs were well contained. Actual product by carats was really strong, and when you include into that fact that the actual quality, in other words, those carats were really great performance, but in the alluvial where the grade is normally lower and the value is much higher, that shows you just what an achievement that was. And then you add on to that the fact that almost the entire December our washing plant wasn't working because we were moving over, shifting over to the upgraded wash plant, which now includes a scrubber, a log washer, various sizing screens, and a DMS. That is all working really well, and it's going to show significant improvement in terms of production and efficiency. In other words, the quality of material going through the sorting house will be substantially improved. And certainly, once we have a good understanding, as Janet said, the next level of CapEx will be improving the sorting house with optical sorters, et cetera, et cetera. So I think Montepuez is just is excellent and a high level of confidence there. And then, of course, one adds on to that Fabergé. Fabergé, if you look at the number of sales orders agreed, the actual number of transactions, the revenue and the margins, it's done extremely well. I also want to just commend the Fabergé team for the 2 awards. They achieved their 2nd awards in the Grand Prix de Horologie, or GPHD. That's the 2nd year in a row. That's very much recognized as the Oscars of the watch industry. I'm personally reasonably confident we may even, if not win, but we should. There's no reason why we shouldn't, but I think we'll certainly be short-listed for the watch we'll be launching in Basel this year, an incredible, phenomenal watch, and it really shows the seriousness with our company is being reviewed by its peers in the industry. And we also got an award for the Secret Garden. Now, obviously, Fabergé is still costing money, but it's heading in the right direction at a steady pace, and is certainly part and parcel of why so many of the other luxury brands are also recognizing the inherent value within adding color to their portfolio, which is very important for increased demand and profitability. And then if we go to page 15, just in terms of other projects, a few that have been on the table for a while. First one is Sri Lanka for sapphires. Still a lot of opportunity, but sapphires has always been a toe in the water, something early, just a learning experience. We also have sapphire opportunities, which we've had for a number of years in Madagascar. I think both of those are exciting, but right now, given all that's on our plate, our focus certainly is going to be shifted slightly, and I'll let you know more on that. Colombia is an excellent asset. I think Colombia is phenomenal, a lot of potential. If you'd asked me towards the end of last year where would we be with Colombia, I would have said finished and sorted by now. Certainly our partners are very keen to move forward. The government of Colombia is very keen to move forward, but we are in Colombia working with a very historic mining environment, which is very informal, and Gemfields prides itself in its ethics and transparency and is subject to very, very stringent first world criteria. And matching those two, if we want to do it right, is a bigger job than I'd first expected, but it's worth doing it right. So Colombia is there. But, and then the most important, I'm guessing, really is Ethiopia and the additional assets that we've really got. And that's part and parcel why you'll see some of our exploration is not so much pulling out of, but slowing down, because Ethiopia is incredible as well. So in Ethiopia, we have 200 square kilometers of licensed area in southern Ethiopia. Recently, just north of us, just a few kilometers north, there's been a lot of production coming from the small-scale miners. Really beautiful. I had the chance of seeing a lot of Ethiopian production in Tucson myself, and it is really, really exceptional. We've also been working very close with the government. In fact, in Cape Town during the Mining Indaba, I was privileged to meet with the Minister of Mines, and they are very, very excited and very committed to Gemfields' work. We've done area magnetics, ground magnetics, we've done trenching. You will actually see, so we did an extensive amount, 3,580 closed holes were drilled, with pigmentite coming up in all of the sections, and actually beryl coming up in, I think, 2/3 of the holes we drilled, which is a very unusual, those of you who know the colorstone deposit. So this is really exciting. And then you add to that the opportunity across the river from Cargem, which is the Mbubachile Hibulele license, which is 100% owned by Gemfields, and the additional expansion opportunities in Mozambique. Long and the short, you have to focus and say, where are we going to get best returns in the quickest period of time, when you consider that our kind of scarcest resource is our people, our human capital. So the other opportunities are there, but very much focusing on key projects in the short to medium term. And that's it, Janice, so we'll just leave it. So what I'm going to leave it on page 17, that's Outlook. I think it's fairly clear to everyone. We'll go through questions and answers, but if I can just summarize from a company point of view, the reality, I think the market demand from a consumer point of view, everyone who's been listening about the millennials and what they do or don't like will see one thing is clear. Individuality, uniqueness, kind of personal experiences is key to their buying behavior. Within the gemstone sector, nothing does that better than colored stones. A lot of your big brands are moving into color because it creates more selling opportunity and better margins. Demand is very strong. From a company point of view, the actual mining and operating performance of our teams is exceptional. That said, there were three that I can think of factors that came together that normally don't coincide. In this instance, they did. And one of those was the Indian demonetization, which had a knock-on impact on our customers. The short-term oversupply of diamonds, and I'm saying short-term because I think the whole sector is very pleased by the fact that the diamond industry as a whole is taking and recognizing the need to market and promote diamonds as well more seriously. And I think that's definitely going to have a positive impact on us. And then, of course, your U.S. elections, etc., those factors. And, of course, the final thing was that Cargem happened to be at the same time slightly lower production volumes. So when one looks at that, it seems as if it's a coming together of factors which are normal, but that's really what stands out. But the real fundamentals are, and I can say as little honesty, better than ever, and the business is really focused on improved efficiencies, reduced costs, and more demand, which is really what grows the business long term. So with that, I think I'm going to open to questions from the floor, and after questions from the floor, we'll take questions from the phone. There we are. Yeah, it's coming. So it's coming. Thanks.
Thanks very much, BMO. So a couple of questions from me. Firstly, just on the gemstone inventory, I noticed over the period it didn't really change in dollar terms, but production was more than sales, so I was just wondering if you could provide a bit more colour on that. And then secondly, just on the sapphire situation, why is Sri Lanka not really working out, and are there other areas of the world where there are opportunities in sapphires?
You do inventory, I'll do that.
Yeah. On the first one, the amount of cost that we capitalize on the basis of the actual cost that we incur, and because we're continuously improving the cost, if you look at the cash cost per carat, compared to last year, it's improving. So even though the carats is actually down, the amount that we capitalize is the same. So you don't expect a significant change in terms of the dollar value.
So that answers your dollar value. In terms of actual kind of to be realized value, certainly I would say the rubies has gone up. You can see the carats has gone up and the quality has gone up. And the emeralds is very much flatline. In other words, the actual production was down, but a nice mix of quality per se. So if you're saying from terms of a potential realized opposed to. From a sapphire point of view, Gemfields, our focus is colored stones. That you would definitely say sapphires. We've always said that once you get proper inertia for those, there's a lot of opportunities, amethysts, tanzanites, spinels, etc. There are so many others. And as an industry, I can tell you right now, all of those producers are extremely keen, if not desperate, for Gemfields to succeed because it creates a lot of potential future inertia for them. So with the sapphire, biggest producers for sapphires in the world has always been historically Kashmir, Sri Lanka, and Madagascar. We've always had license in Madagascar. If you had to ask me personally which would be my first choice, it would be Madagascar. Our challenge with Madagascar is with the sector itself has had a lot of, if I can say, lack of transparency. There's been a lot of challenges in Madagascar, leave it like that. We certainly saw not long ago, and we were literally invited into Sri Lanka with certain changes from the political situation. We thought that very encouraging. We realized it's always going to be relatively small scale, but it has been mining sapphires from BC, so it's been mining literally for thousands of years, but at a very small scale. And a lot of parties within Sri Lanka were very eager to change because they can see how when Gemfields comes in, we drive demand, drive prices, which is really good for the miner and the country as a whole. The ones who always struggle is the middleman who then has benefited from the lack of transparency and the ignorance of the miners, etc. But one thing with Gemfields, we were keen. I think we were doing some really positive moves. I need to be cautious here because we are televised, etc. But we realized there was a chance we could be brought into political discussions, which is not, we've never done that. Our focus has always been building an industry, building a sector, and helping a nation. The last thing we want to do is be dragged in unnecessary into other people's political agendas, and from that point of view, it doesn't make sense. But the assets are there, and they've been mined in a very small-scale way. So, that's kind of plain and simple on that. Okay.
Thanks. Just on working capital, it looks like there was sort of net $10 million outflow, mostly payables driven. Maybe just talk a bit about what was driving that, and then sort of the time frame or expectation around potential unwind of that in H2 and into FY18. And then also, second question, obviously you have guided to EBITDA margins down. I think previously it was 30 to 35%. Maybe a bit more quantitative outlook or guidance on that if you can.
Yeah, on the first one, the working capital movement is just mainly as a result of your normal trading accounts payable. So it's just the timing on paying the accounts outstanding at the time of the December end. I don't believe it will significantly change for the next half year. So if you look at the cash flows that we had for the first 6 months, it was about, your negative cash was about $30 million. I don't believe that we will be worse off on the second or on the full financial year, given that we're going to have we have one high quality and a mixed quality of rubies for this second half. What impacted the negative cash flows that we had on the first 6 months was we only had a low quality of auctions for emeralds. With regards to the EBITDA margin, I have to say I cannot provide a certain percentage in terms of the outlook for EBITDA margin, but it will be less than what we've initially anticipated of 30-35, and that's predominantly because the auction that we are foregoing for this financial year is in relation to higher quality, which are typically higher margins compared to the low quality auctions. With
your stock just being booked in at cost of production. So there's a big difference between booking it into your account than actually doing the sale per se. So.
Yeah. Thanks. Quick question on working capital. So Fabergé is growing quite quickly, but with a substantial working capital investment. As that business grows, do you expect opportunities to reduce the amount of working capital required there?
The main working capital requirement in Fabergé is in relation to inventory. If you've seen the last 2-3 years, the growth in inventory hasn't really been that much. We started in 2013 about $35 million of inventory. We've increased it between $40 to $45 million, mainly to support the watches product lines. If you look at a significant the peer groups of Fabergé, if you look at a single store, majority of the stores, they would have at least an equivalent of the inventory balance that we have for the whole of Fabergé. So I see that there's a potential for us to invest more in inventory, but certainly at this stage, the level of inventory that we have for Fabergé would remain as is, at least in a short period of time.
And then I'll just add, so I just wanted Janet to give you obviously the financial model, but you kind of answer, but here's the bottom line. You're really successful luxury brands such as Fabergé is a fair capital or requirement for working capital in terms of inventory, stock, etc. But from a Gemfields point of view, we've always managed the business relative to current cash flow. So we have a situation where we've got stock, there's increasing demand, but we certainly don't want to be, and I'm going to say it openly, and any of the other miners don't like it, well, so be it. But I think we could all learn from iron ore. Iron ore, everyone was moaning because they all wanted more and they dumped it on and price went down and it takes a long time to come back. Iron ore is one thing that there's plentiful supply. Our gemstones are exceptionally rare, much rarer than diamonds. So the decision was, why chase pure cash revenue at the moment purely to achieve some of the numbers when we know these very rare gems will be selling undervalued. So on that point of view, you make a conservative view where you say you take a little bit on the nose now, especially when you put yourself forward as leader, champions of the sector, leaders of the sector, and want to do better than some of the peers in the in the next sector that is aligned to us, you know. So from that point of view, we will then manage accordingly. So yes, there's potential to increase it, but certainly right now one recognizes where the business is and say we'll be cautious. We'll be a little bit cautious in the short to medium term to make sure we can manage with what we have and then build on from there.
And finally, the structure of your auctions and the frequency of them, as you produce more and potentially sell more, do you plan to change the frequency of those auctions?
Yeah, as the answer to that one. So the answer is yes, for various reasons. One is for a while it was very important we did the auctions the way they were, both for emeralds and rubies, because we were the first company bringing large volumes on a continuous basis. The next thing, we were the first company who actually had a rough grading system that could get the right quality of material to the right segment of the market in the right way, etc. And we had to build their competence, and they had to understand how the value of this to their business. Now that is working definitely for emeralds, to some extent for rubies, so our customers are understanding it. We're also saying to what extent can we learn from it and take the whole demand curve, and especially when you recognize that we have very chunky cash flows, plus it's quite tight on our customers. So you would have seen at this last auction of ours, a number of our schedules were at the 2 million plus. Now, that is nice because the idea was to allow that customer a unique strategic advantage. So you either had a large volume of same size, shape, and color, or smaller volume but in phenomenal gems. And for a position at the point in time, that was important that he had that unique advantage. But as more producers are coming on, and it's because of our success, a number of them are copying our auction thing to some extent. It's important that we move to the next level. And so if we look to have more frequent auctions of lower value and reducing the value per schedule, makes it much easier for people to access them. So this is something we've discussed with the customers. We're seeing a lot of opportunity to move, but we'll let you know as soon as it's clear. So right now, as I talk to you, Adrian is looking at various potential venues. The fact that we would then have an auction, let's say an auction every 2 months of slightly less emeralds and rubies, better cash flow. You might then even have a situation where that auction runs, if I can say, for a month, but it only closes in the last week. So people have a month to come through rather than us being the whole time. Now, to date, the way it's worked has been very important, but with more players starting to copy what Gemfields does, it's time for us to take it to the next level, and various potential methods are being reviewed. But I'm sure they'll have a positive impact, and the market seems quite happy with that too. Okay.
Hi, just expanding on what you said before, in your introductory remarks, you mentioned that a lot of people are copying Gemfields or bringing some supply onto the market, some smaller players. Could you just expand on that? Who are these people? Where's it coming from? Is it, emeralds, rubies?
Well, exactly. So there's a few. So my original business was Tanzanite 1. Tanzanite, we always did auctions. We did something similar. So we had stock and we had a rough grading system. It was less. It was only like 100 grades odd for Tanzanite, and we had certain customers, and we did it that way. When I left, they stopped doing that. I think they started doing their own cutting and polishing and direct sales and etc. The mine itself was sold to one of the downstream stakeholders, one of our customers, a company called Viabav, or STS is their channel, their TV channel. They acquired it. They took a while to get used to it, but they're now doing the same. So literally a week before we had ours, they also had a Tanzanite auction of various grades to very similar customers. So that's not directly competing, but within the sector, realizing the advantage of doing that. Within rubies, you will find now that you've kind of got Mustang and Redstone, etc., coming into our area. They're not producing yet, but they are certainly trying. They have been talking about potentially doing a similar auction system either on their own or with us. They've also been sending it to the States. They're looking for different ways to see, and they're still trying to work out the market. I don't want to pull anyone else down, but Gemfields definitely has the market's interest at heart, and we have a long-term view, and at the moment we're unique because everyone else tends to have a more short-term thinking, and that means they operate in slightly different ways. I'm sure ours will be right, but that's for rubies. And then for emeralds, Muzo, which is a big mine owned by an American company called Texma, they were cutting and polishing, selling directly themselves, and now also started grading and seeing that the auction system potentially is right. I was 2 weeks ago in Russia meeting with Gokhran, which is a big state entity for colored stones, and they actually came to our auction because they want to learn and see how maybe there's potential. So don't to read into that. It just shows you they're waking up, and they are hoping within the next couple of weeks to have an auction of Russian Malishev emeralds as well. So that's the sector. And then, of course, our neighboring mine across the way in Zambia, it used to be known as Grizzly. It's now known as Gem Cantone. And my understanding is that Lev Levi, those who know the diamond industry, he's acquired them, if not the 100%, he's certainly the major share. And they've also been looking to mine, auction, etc., sort and grade. In fact, to date, their strategy has been every time we announce an auction. I know a few people have said you're announcing your ruby auction but not your emeralds. We're a little bit more cautious in that because every time we announce ours, they have one or two. I'm sure that'll improve in time. It's just a very, if I can say, immature way of coming into the sector. But it's a reality of a growing sector, which is challenging but very positive because to date there've been no comparatives. It's not. But if anyone wants to say, is this a serious sector with a serious potential, the fact that others are coming in, especially players from the diamond sector, etc., shows you that it's real. What are we saying? So.
Hi, Justin Chan from Numis. Just a couple of questions. One, a lot of your, you said that you've deferred CapEx at Kagem this year. Could you give us an update on what your budget now is for the full year and what the corresponding longer-term impact is on your production forecasts?
I'm not expecting capital expenditures for the next 6 months to be more than a couple or $3 million. So that means significant part, 60–70% of the initial planned capex will then roll over to the next financial year. Worst case scenario, you're probably looking at the expansion program of increasing the production to more than 40 million carats to extend by another 1 year, although we will see in the next 2 to 3 years that there's still going to be a gradual increase in terms of production for Kagem.
Yeah, so that kind of ties in exactly with Fabergé. The question on Fabergé is you've got to cut your cloth, you know, to what you've got, or what do they say, cut the dress to match the cloth or something along those lines. So it's the same thing. There's a lot of potential to accelerate the expansion. If we'd got some of the financing sorted out earlier, we would have chased Kagem earlier on, but we didn't. The fact that we've now made a decision to delay, and as I said, rather have a long-term view than a short one, does mean that we're not spending as much money. The assets are still in the ground, the potential is still there. It just means that, you know, those numbers that we're chasing will be slightly further out.
Right, and just on matching the cut of the cloth and the dress.
Yeah.
Is grade at Kagem at all a factor that you can control or use to influence production when you have, for example, recently a weaker period of demand?
So the grade there, basically the best way we've actually managed, you don't want to use your grade per se. I'm not sure if I quite get the question, but if you're saying your grade is down, drive demand by having lower sales, I'd much rather have it in the bank and have it in the safe and manage sales by, you know, knowing that it's secure. Your grade will fluctuate to some extent. The way you'll improve that is keeping your costs down, your mining efficiencies up, and increase the scale. But we do mitigate that by having stock. So we have 12 months worth of stock, which allows us to mitigate that as and when. So if straight away tomorrow we were very sure that we would, right now, you know, we could get a really nice revenue for our product, but what would the longer term impact on that be? If there's a slight oversupply, we don't want to chase that too much too soon. So let's just wait and get some of these consumer and demand coming from the sector itself, let that flow through, and when it's really clear, you know, deliver on that.
If you look at the grade for Chama Pit itself, according to SRK, it's ranging between 200 to 300 carats per ton, and we're still achieving that. So a significant portion of the reduction in the grade is because of the Fibulele and Librente, and because of Gemfields' continued focus on the longer term, we are still continuing with the bulk sampling operations. Actually, if you look at the production for Fibulele and Librente, even though the grade is very low, the quality of products we're getting is very good. It's very pleasing. So those of you who would be planning on joining us for the site visit, it will be very good for you to actually see the products that's coming out from those two pits.
So just following on from the quality, at some point will you be able to issue us with rough kind of revenue per ton numbers on what's coming out of those bulk sampling pits? Because at the moment it's quite tricky to all we see is a grade impact, but we don't really see a value impact right now?
It's going to be very difficult to say the revenue per ton or per carat.
Did you say revenue or grade? What did you just say?
So will you be able to give guidance on the value of the stones coming out of, at some point will you be able to split out maybe what's been sold and roughly what was coming out of those pits? Because it would be quite valuable to all of us to have some guide on kind of the quality of those pits versus the existing Chalmer pits. Because at the moment all we're seeing is a grade hit, but there's no other information on kind of...
Yeah, if I can just, so first of all, they probably could, literally because, you know, when we sell it, it's mixed. So the actual material is mixed, so whatever comes through gets mixed in the same and goes. Our guys, to some extent, if you said to Adrian, okay, there was that schedule 1, 2, 3, 4, what did we get for that schedule? Remember, the schedule is different grades. It's not just one grade. There's a blend of grades. We get a fixed price. He is able to split it in his mind, best estimate of what he thought we got per grade, per size, etc. So it's not a 100% science, but it's fairly accurate when you track it over years. And then you could probably say X percentage you're guessing is that material. So you could reasonably do that, I think. But at the end of the day, the value, if you come and have a look and see, the value is the total operation. While the carats are down there, the quality is good, but most importantly, your stripping ratio is very low. So in fact, it's probably net evening out. That's why we continue to do those, because your actual cost to profit for your newer projects compared to Chalmer is pretty much online, and it gives you access to more product that's in the ground. And most importantly, I think a lot of countries around the world have got that use it or lose it philosophy. So you need to make sure you're doing some level of work there. Otherwise, it's not as if you're leaving that asset for the long term. It might become somebody else's asset, you know, if you're not doing it. So I say we can talk about that. I don't think there's too much value other than, you know, per ton, your cost and revenue are pretty much working out in time.
Yes,
you understand what I'm saying?
Yeah, no, I do. If I ask probably a similar question in a different way, how long do you think it will be until the bulk sampling starts to deliver mine plans, resource models, etc.?
It's different. So one of them is the newest one. So your Lebuente is the newest, and there's a lot of work doing there, and I think the chances are we'll do that. Your others, your Fibalele one, which is really extending all the way through to Sandawana, so it's fairly long. That one, it's giving a nice production, high quality, really close to the surface, but the dip is quite steep, so one's going to have to look. That may just be, at current prices, a large bulk sample over a period of time, unless we can take it forward. But Lebuente is a much bigger area, very shallow. I think, if anything, that's probably going to do a resource statement on at some stage. The other one is access to good product, good price, really adding value, rather than losing it, but fairly deep stripping. And as I say, if you come to the site visits, you'll see all of that quite clearly.
Again, final one from me. On the auction volumes, obviously very nice pricing, but slightly lower volumes in the latest high-quality auction. How, looking forward to the second half, I know we're not going to see a high-quality auction, but in the lower quality and then beyond in the high-quality auctions, can you give any guidance on what you are thinking for volumes? Can we start to see volumes build?
Yeah, so certainly we're hoping so. So if you think both of the last one, our December auction for rubies, while our customers for rubies is Sri Lankans, there's Thais, and there's Indians, of our normal Indian customers, which is at least 12 or so of them, if not more, only 2 or 3 came. It's much stronger within Thailand, the actual sector, but to date on a lot of the auctions, your Indian market have either bought or partnered as financiers to some of those, because remember, the industry itself, we don't have banking there yet. So that was why, you know, we had moderated that one. And certainly, as I said, for this auction as well, we felt it was important that we got a good price, but we weren't just chasing dollars. So we did moderate it. I'm hoping that it goes in the right direction, but I don't want to, so we certainly would like to move it slightly, but I'm not going to chase it per se, and it does depend on how quickly some of these improvements we're seeing in the bigger market flow through. Just quickly, and I think this is vitally important, we speak a lot about the demonetization. I need to be very cautious there, because we're not alone, but, you know, again, last thing we want to be is involved in politics per se. And sometimes mining or international companies have mentioned these, and some people have championed it as greatness or criticized everything you say is pulling the government down, and the alternate party use it as a leverage. We don't want to do that. Overall, I spoke to all my customers, and we've been to India, and I've spoken to a lot of consumers, and the whole market is actually very pleased. They see it as clear leadership from the country, and certainly forcing them to much more first world business methodologies, etc. So I think overall the market sees it as a positive and strong leadership, and I think everybody's responding to positive leadership. So, but it does mean that you have to adjust. It does mean that, you know, your staff, for example, have to get used to opening accounts, getting bank cards, money coming through slightly different ways, etc. But I do believe in the longer term it will be very positive. You can see our customers. It's certainly going to help us when we champion transparency and ethics, etc., because it makes that downstream train much more auditable, much more transparent. Even though it was, because we've done it ourselves, it's just much easier when you're using those, and that was part and parcel of Mr. Mordy's kind of thinking. So I think it's going to be positive, but let's wait and see. So if the better they adjust to that, the quicker they can start to move some of their excess diamond supply stocking. As I said, that is an impact. Let's not kid that, but that's also seeming good. The quicker, you know, as long as America stabilizes and so on, I think it'll be good. And then it also depends on to what extent some of the other producers will still kind of swap. You know, I personally, it's a personal thing, believe it's a very short-term thinking, because I know we have some idea in the industry what stock, but the idea is to curry favor by dumping prices. Now that to me doesn't make sense, and I'm not going to follow. The last thing I want to do is follow, because that certainly hurt our customers and hurt the consumer. So depending where that goes, it should be positive. But whether it's positive in 6 months or in 12 months, I'm very sure by then, you know, that's why we're sure. This year we're happy to take a little bit on the nose with the confidence that our next year numbers will be very strong again.
Thank you.
Yeah. That it? Okay, if that's it from the floor, can I ask if there's any questions from the dial-in?
Thank you very much. Telephone participants, if you would like to ask a question, please press 01 on your telephone keypads now. You can cancel at any time by pressing 02. We'll have a brief pause while telephone questions are being registered. Once again, if you would like to ask a question via the telephones, please press 01 on your telephone keypads now. And we have no questions from the telephone lines at this time.
So with that, I just want to thank all of you again. Those who dialed in, thank you for listening. Those of you who attended, thank you. Thank you for your questions. And we look forward to delivering very positive results later in this year. So thank you.
Thank you.
Thank you.
This now concludes our session. Thank you for attending. Telephone participants, you may disconnect your lines.